Hey everyone, welcome back to the channel. Despite Palantir's recent stock surge, their insiders have been selling like crazy. Peter Thiel, Palantir's co-founder and chairman, has sold over $1 billion worth of stock in 2024 alone. Alex Karp, Palantir's CEO and another co-founder, has sold $230 million of stock just in September, and their CRO cashed out $7.8 million in the past week. Now, executives will sell their stock for a myriad of reasons, and these sales were part of a plan, but the amount sold has drastically accelerated as the stock price continues to climb. Which begs the question, why? Why would they pre-build their plans to sell quicker as share price climbs? Does this show that they know that their company is overvalued? I've been a Palantir shareholder since 2021, and honestly, I can't think of a company in my portfolio that I have more of a love-hate relationship with. It's been a bit of a rocky road to say the least. Palantir was one of the biggest laggards in my portfolio for quite a while, as the stock price shows, but I held on because I knew people at the company who are incredibly talented, and as a software nerd myself, I thought what they were building was truly unique. Plus, there's one other really important reason I'll touch on later. So I wrote it out, and the stock is now up 50% from where I bought, which is exactly why I'm thinking of selling. Smart money sells when prices are high, and buys when they are low. This is what most individual investors get wrong, and it's why many new investors lose money in the stock market. And it's not their fault. The current system promotes FOMO investing. But the only way you can combat FOMO investing is by doing your homework and buying businesses that you understand. The systems in place today make it very, very difficult to do smart analysis, which is exactly what we're trying to change. So I'll go over my thoughts on Palantir's business, and by the end of this video, I'll make my decision on whether or not I'll continue to hold or sell out of the company. Let's take a closer look at Palantir's business as it stands today. Now, if you've been on this channel for any amount of time, you know that we don't look at stocks like little pieces of paper to trade, but instead we take a Warren Buffett approach to the markets. When we buy, we pretend like we're buying the entire business. When we think of stocks, we think about what they actually are, partial ownership of an underlying business. And so with that logic, the first step you have to take before you start any discussion of a stock is to understand that company's business model. How do they make money? If you're already familiar with Palantir's business model, you can skip this section. But Palantir is one of the most covered stocks on YouTube, and I've never seen anyone actually give a rundown of their business model before. At best, you normally just get a topical discussion of business results, or at worst, you get just plain old stock hyping. Anyway, the best way to figure out a business model? You want to go straight to the source, the company's annual report. There's no better place to understand a business model than hearing it straight from the horse's mouth. So, inside of Palantir's annual report, we can see that they build software that powers organizations to effectively integrate their data decisions and operations at scale, which is vague to say the least. And that's something that the company has struggled with for quite a while now, describing what they do succinctly. But as we scroll down, we can see that their business model involves 4 software platforms that they've developed. And again, in the description, each one of these is still kind of vague. And if I was looking at it for the first time, I wouldn't really understand what the platform actually does. But if you go to their website, they actually do a really great job showing what each one of these software platforms does, and the different use cases and customer testimonies. I highly recommend checking these out if you're trying to understand their products better, because I won't be able to cover all of them in this video. But in essence, we have Gotham, which is for government and defense agencies. This system gathers a ton of data and helps derive actionable steps. This is a great clip to really show what Gotham does. Now remember, this is a video directly from Palantir, so it's definitely a marketing video.
As a notional example, an escalation could start with something as simple as the Chinese military conducting a routine exercise in the South China Sea. To see the full picture and make tactical, operational, and strategic decisions, the US and allied forces rely on Palantir. Monitoring the exercise, AI models running on satellite data detect an increased level of military activity. To the north, ship detection models identify an alarming buildup of fishing vessels surrounding a major Taiwanese port. An activity model detects that many of those ships are tied together, suggesting an ulterior motive and increasing the risk of a blockade.
So they are, in essence, taking a vast amount of data and pulling out insights from it. Then they have Apollo, which helps software deploy in different environments. Then, and this is getting into more of their commercial solutions, they have Foundry, their big commercial move. This helps companies connect, clean, and analyze data. It was released in 2016, but it was really being pushed on back when I bought the stock in 2021. But what made me even more excited was their final product, which was announced in 2021 but didn't release until 2023, and that's AIP. And that takes all of the data and helps predict outcomes or figure out the best courses of action from all of the data that Palantir ingests. But that's basically what Palantir does in a nutshell. Here are some of the problems with their business. The first is that they're moving a little slower than I would have imagined back in 2021. In Alex Karp's most recent letter to shareholders, which I love that he does this, by the way, but he included a graph of the number of US commercial customers. It is growing, there's no question about that, but a company with this amazing software, I would expect to grow a little bit quicker. They've roughly 10x'd over the last 3 years. But the average company does pay them more than $5 million a year, so they're going after the big ticket customers. And Alex Karp constantly says that that's part of their business strategy. But the fact that they haven't been growing their customer base at a really fast rate is reflected in the company's revenue, which has grown at a pretty mixed rate of about 30% compounded annual growth over the last 5 years. In 2023, the company did become profitable though, and they are free cash flow positive, and it's growing pretty quickly. So the business is doing pretty well. And it's great to see that the company has gone profitable. I mean, their net income has grown by 156% over the last year. Their revenue hasn't been growing that impressively. So it means that the business is just becoming more efficient. So if net income has been growing really nicely, but revenues have been growing pretty modestly, why has the stock been on such a tear? Well, the only answer I could think of is speculation. And maybe their recent admittance to the S&P 500, but mostly speculation. And that's something that's kind of been this company's shtick for a while, individual investor speculation. And there's a whole other video on that topic on its own, because I believe it's how companies' investor relations will work in the future. Alex Karp has gone a long way to talk to individual investors. I love when companies don't just listen to big analysts or their institutional shareholders, but actually listen to the individual shareholders of the company. This is not only a big reason why I've held on to the shares during this time, it's a big component of why we're building Flank. So am I against this speculation? I'm actually not. It seems like the company is actually delivering. As I mentioned earlier, I spent a few hours watching the customer testimonials from their Foundry and AIP products. And from what I can tell, customers love them. The vision of taking large amounts of data and drawing actionable insights from it in Palantir's unique ontological approach is starting to come to fruition. Right now, they're really just targeting the largest commercial customers like Fortune 500 companies and governments. But with AI advancements, it may be easier to deploy their software quicker in the future and go after smaller customers. This would fight one of their biggest problems, customer concentration. But I can really see their ontological approach being a much needed middleman between the LLMs like OpenAI, Claude, Gemini, etc. Because businesses won't be able to just use them raw. They need to have that digital twin before they can start drawing business insights. The big question I haven't fully answered for myself yet is, does Palantir have a moat that prevents those LLMs from vertically integrating? Which basically means, adopting their own ontological approach for businesses. My first gut reaction is, well, it's taken Palantir 20 years to develop those dynamic ontologies, so that seems unlikely for now. Alex Karp has a pretty cogent quote to address this. He says, quote, "To actually make AI work, you need an ontology. No one has an ontology." And I fully agree with him. So that leads us to the final question. Am I going to sell out of my position? And I know I'm kind of contradicting myself here. I do believe that this is a speculative stock. I mean, it's trading at 95 times future earnings. So I certainly would not buy it at its current price. But when I bought this stock, it was 50% lower. And here's the thing. I love how Alex Karp is keeping me, as an owner of the business, really up to date on how the business is running. Here's Buffett.
The main thing that they can't mandate in annual reports, I really like to have, I like to know as much as I can about the person that's running it and how they think about the business and what's really going on in the business. In other words, I would like to have a report that would be identical to what if I owned half of a company but was away for a year and I had a partner who owned the other half. When I came back, that he would tell me about what had taken place during the past year and what he foresaw coming up.
I follow the companies that I own very closely. It's part of the reason why I love Buffett-style investing so much, because we treat stocks like business. Buffett has another quote, "I'm a better investor because I'm a businessman, and I'm a better businessman because I'm an investor." I've gone much farther in my career because I understand how businesses think and operate. So it's like real-time case studies. And Alex Karp has done a wonderful job of keeping me up to date on what's going on at Palantir. Just like how Buffett said when he reads an annual report, he wants to be kept up to date on the business. That's how he writes his own annual reports. If Flank ever has annual reports, that's how I'll write mine. Now, another key component of Buffett-style investing is to invest in your circle of competence. What are things that you know that other people don't? And I think this company would be very, very difficult to understand if you weren't a software nerd. I mean, if you've watched the interviews with Alex Karp, you know he talks like a software geek, even though he's got a PhD in philosophy. But I know he knows software. But he is really doing a good job of keeping investors up to date. So I've delayed long enough. Am I going to sell my shares? I'm actually not going to for right now. I could be regretting this in the future, but I'm going to continue to hold. Here's why. I believe Palantir's ontological approach to large data sets is a durable competitive advantage, and their rate of innovation will continue to accelerate as AI moves further and further along. So my thesis on the economic nature of Palantir hasn't changed, and for that reason, I'm not selling. I'm going to continue to hold. Here's Warren Buffett's thoughts on when the right time to sell a stock is.
Very good question about selling. It's not our natural inclination to sell. And on the other hand, we have held the Washington Post stock since 1973. I've never sold a share of Berkshire, having bought the first shares in 1962. We would sell if we needed money for something else, but that has not been the problem in the last 10 or 15 years. 40 years ago, my sales were all because I found something that I liked even better. I hated to sell what I sold, but I also didn't want to borrow money. So I would reluctantly sell something that I thought was terribly cheap to buy something that was even cheaper. Those were the times when I had more ideas than money. Now I've got more money than ideas, and that's a different equation. So now we sell really when we think that their competitive advantage is as strong as we might have thought, as we thought it was when we initially made the decision.
I believe Palantir's ontological approach to large data sets is a durable competitive advantage. Not only that, but I believe that the pace in which they're able to innovate is only going to increase as we continue to see more and more innings of the AI race take place. So, since my thesis on the economic nature of Palantir hasn't changed, and I don't need capital for any other reason, and just as Buffett said that he would sell in the early days when he had more ideas than money if he needed the capital for something else. I'm also currently not in that position. I've been scanning the markets and valuations are pretty high right now, and I'm not really seeing anything else that's an attractive buy. So for that reason, I'm not selling either. As a Buffett-style investor, my favorite holding period is forever. Now, I'm not sure if I'll hold on to Palantir forever. I definitely consider this to be one of my riskiest investments, but I rode out their last winner, and that's because of how well Alex Karp kept me informed on the business. So let's see. But again, I would absolutely not buy more at the current price, no matter how good their growth story is. Thanks so much for watching this video. If you enjoyed it, please consider giving us a like and subscribe. If you like this style of investing and want to learn more on how to do it, there's a link to our Flank investing platform and a link to our free Discord community in the description. We're still very much so in the early innings on our product, and so we'd love to see you there and get your feedback on how we can make it better in the future. Thanks again to our Patreons for their support, and we'll see you in the next one.